Stacking Benjamins, it's all about the cash flow. Risking big on Wall Street where the stocks grow. Power ties in the concrete market jungle. Portfolio thick, make that money bundle. Money talks, I'm the voice with the slick vibe. Wolf howling while I'm climbing that high rise. I chase the bread, but now the crumb is what I leave.
What's up, guys? Welcome back. Malik here, and today we'll be looking at my one trade on the Nasdaq 100 today. So I made a trade from 944 to 1021, got $44 profit, which is a little over 2 of my risk to reward. So I just took it. Didn't feel confident that the market would have rallied. Felt good with that, so I just took that. Didn't make any more trades for the day. And as you can see, I would have gotten stopped out at 3 p.m. I could have made a little more by 1 a.m., but that's how it happens sometimes. So let's just get into the trade and see what was my entry and then where I closed it, where was my stop loss as well. Well, this doesn't show stop loss, but my stop loss was 20. You know, I typically go for $20 in terms of risk, and then I had a quantity of 0.08, so wasn't too bad. Vanilla play honestly. And if I had gotten stopped out for 20, wouldn't have even been that bad either. So I entered at 17,716.1, and then I closed it out at 772.35. Had a stop loss of about 20. So I probably had a stop loss like 17,700 or a little below that, like 17,695 would have been around the area my stop loss would have been. It would have been $20, a little bit over $20 in terms of the move, because it's not a 0.1, it's a 0.08. So it would have been 80% of 20, however that works out. But you can see basically I didn't get stopped out on the 9 o'clock candle, and I basically closed it out at this part of the 10 o'clock candle. And you can see my risk to reward was about a 2.02, so a 2.02 to 1 risk reward ratio, which isn't bad. It's a typical day. I would have probably gotten stopped out at 3 p.m. if I had decided to hold it longer. I still working on a longer term strategy, but when it comes to a day strategy, I'm thinking I'm very close to there where I can execute a trade, know if I'm right or wrong, move to the next day. You can see my losses, they range at about 20. So 20 loss, 2030, 2030, 2360, 2032, 20. So I'm not interested in risking more than $20 on a trade to make whatever I make. So if I make 44, if I make 100, if I make 300, 400, the risk is probably still 20. Like, I'm not upping the risk to take some more profits. I'm keeping the same risk. And when I get some good profits, it pays for all of the times that I might have been wrong. So it's just fine tuning and being more right. That's basically what happened today. I don't have much to show you. You can see the market basically traded within a range. Let's actually look at today's range. It didn't really do much. So let's see. Let's just do. So this is 9. Let's get rid of that. Just put it into a nice little boxy box here, just to see what the market did. So the market basically did this. Market basically did nothing today. So we opened here and we closed basically right at open. But then this range is what you could have made some money off of. As in, if you took it from 9, took it to the downside, took it at this level here, which is either demand or supply. It's acting more like a demand or I think it was a gap somewhere where you can see the market actually tacked into there multiple times before pushing up. And then every time it kind of tacked there, it kind of pushed up. And even at 3 p.m., it came right down to that level, broke it down, took out some, I would say people had money down here expecting to short, came right back up stopping out a lot of people. People lost money on that if you had your sell stop positions right there. That's what happens. I mean, holding a longer position, you have to have a bigger balance in the event that it goes against you. And let's get into the watch list now to see how things are trading this week. It helps me and it helps anybody that is actually watching this to stay up to date with the prices. As much as I'm not entering any options, it's still good to see the potential that could have played. So I'm guessing that Nvidia is probably going crazy right now, but Nvidia options and SMCI options are so expensive, and then if they depreciate against you, it's like you feel like you would have definitely been better just watch it, not even taking advantage of it until you're in a financial position to do so. And currently I'm not in a position to just lose $1,000 on an option if it doesn't go my way. Granted, it can go my way, but then if I lose $1,000, it doesn't feel good. It's gonna mess with my psychology a bit more than it needs to. So Bitcoin is at 63868 or 876 when I wrote this down. So it's not far from last week. It's about the same price that we were at on Friday. A difference this week is Tesla. Tesla is at 193, so it's up $30 on today. So it really moved up today about $25. If you had 100 shares, you'd have made $2,500. I know people who made good money today, including myself. So anybody who was in Tesla actually benefited today on that move. IMMR. So IMMR is actually looking like it wants to go up a little higher at 7.25. Bitfarms, let's see. Bitfarms, you're going lower, man. Bitfarms is actually holding a bit lower than what we expected. I mean, I was expecting a little reversal move, but nothing on that. What's interesting, we have Mara earnings tomorrow. That's something I probably want to listen to see what are their plans. Do they have a strategy to combat the increase in or the decrease in the amount that they are going to be paid per mining block? Do they have a plan? And I would expect all Bitcoin miners to have some sort of plan to mitigate that barrier or that obstacle that is actually that they all are facing, because they're all fighting for the same commodity. So they all have that obstacle to kind of address and figure out. This one is Nvidia now. I'm estimating at a little over 900. 879. This is crazy. Nvidia is the same price as last week Friday. And this is something where if you had an option on it and it was at the same price as last Friday, you would have lost money even though Nvidia didn't go down. Why? Because the swinging up and down affects the IV of an option, the implied volatility, which I hate so much. That's what makes it really feel like a scam to me. Why I started to kind of leave from options and try to go the CFD or the futures route, where you can actually trade the price and not all of these derivatives and all of these time factors and all of these things that make you end up losing money, and the broker just makes money from both people, from both the person who is creating the option and both the person who is buying the option. They just make money on both sides, which is a zero-sum game to me. Like, everybody loses at that point. AMD, we have AMD at 160, so just over $3 more than last week. And SMCI, I'm looking for that exaggerated move above 900. 891, so it's a little higher for sure. It's definitely looking poised to go a little higher. Like, it wants to break out of this zone and go up. And this is wow. This is something. And you have earnings when? You have earnings tomorrow. That's crazy. Their estimate is 5.7 for earnings. Their revenue is 3.9. Wow. Tomorrow can be a big day for SMCI. I might consider playing it, but I would only want to risk $100 on that, to be honest. Like if it goes in my favor, cool. If it doesn't burn as much. And I think that's the most important thing with trading is reducing the burn when you lose, because you're definitely going to lose. You can't be right all the time unless somebody would have been making money all the time, right? So what can I write about the narrative today? Bitcoin, same as last week. Nvidia, same. MMR, little up. Tesla, continuing higher. Bitfarms, lower. Semiconductors, prepping for earnings release. That's what I would say for these stocks. And I actually appreciate this. I'm going to leave this in the description if anybody wants to actually take a look at it. You can't edit it, but you can view all of these prices, and all of these prices are accurate. And also, what are my notes? What is my interpretation of what is going on? Just a small snippet, right? But that's basically it for today's video. Look forward to me getting funded on the Fivers. That's a $10,000 account, and then we'll actually just keep scaling from there. I want to get to the $4 million account on Fivers, which is going to take some time, some practice, some strategy, some mastery, but I know I'm going to get there soon. So you'll see all of that here, just like how you have seen me bring the account down on funding pips and Fivers, bring it back up to getting funded on funding pips, getting the withdrawal now, and then you'll see we get funded on Fivers, getting a withdrawal there, continuing to scale up and step up the accounts that I have. So I want to get to that would be I would have $15,000 in funding, get to 50,000, get to 100,000, get to 500, get to a million, get to 4 million on Fivers alone, and then we can actually keep going from there. It will all be documented here because I actually enjoy this. It's a trading journal. It helps me, and as well people can see what it's like for a trader going through the journey. Very transparent, showing everything. And yeah, it's a mouthful, showing everything, and you can just see the strategy, see the plays, see what's playing out, the legitimate trade. So it's nothing hidden. You can see the curve of the account here. At one point I was down close to being losing the account, but then managing the risk, I was able to take the account back up. And it's at these low points where you really see how strong you are mentally, because you can bring it so low, anything can happen, and then you just keep calm, reduce the risk, and as you make some good trades, you're able to bring yourself back up out of the hole and move forward, right? And I think that's what makes trading so magical, because you can actually be very low, be taking a lot of losses, and then you have one good trade, and that's allowing you to build back the momentum and kind of scale back higher. But that's it for today's video. I hope you enjoy it, and I'll see you in the next one. And as I said, we're not trading funding pips until I get a payout there, and then we can actually go back to trading the funding pips as the YouTube portfolio. And then until I make another withdrawal on funding pips, then I'll go for probably another account to just scale it. I don't know. I might diversify and not have everything in funding pips. I'm hearing a little chirping about the solvency of that company, and I don't want to be a casualty to that. I don't want to be like a sitting duck. Probably Fiverr is maybe the best way to go. They seem like they have been around for a while, and I don't hear much mess about them, probably because they're a little bit more stricter when it comes to the rules and trading and all that. So I'll see you in the next video. Bye bye.